Hey, it's Rav. Welcome to Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. You see, the show is designed to help us grow our money. You see, we all go to work. We take our time to go to work. We get a paycheck in order we can eat, in order that we can provide. We take our time, we work, we receive a check so that we can take care of our family. But imagine a life where money makes you money. So you can take that precious time, you could work a little less if you wanted to, and you could spend it with family, friends, engaging in a purpose greater than yourself. That is the impetus, that is the purpose, the mission of Everyday Investor TV show. Now remember, whenever you're offered any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what's the return on investment? 2, when do I get that return along with the money I put in? 3, what's the minimum investment amount needed? And 4, what is the risk, the worst case scenario? I am so excited about today's show. We are talking to my good friend, wait for it, we'll be right back. This week on Everyday Investor TV show, we're talking to my dear friend, I call him Uncle, Anil Walia is here, teaching us how we can make money investing in the US.
So my formula is to buy single family homes, 3 bedroom, 2 washroom, 1,000 to 2,000 square feet, which can give me 1% rent of the purchase price.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rav. Welcome back to Everyday Investor. Before we talk to Anil Walia and learn how we can make money investing in the US, let's find out what's happening in the world of stocks with stocks expert Omar Khan.
Thanks, Rav. Omar Khan here, guys, with Data Trading. Want to give you the weekly market update. Markets continue to grind higher. Why? Because corporate earnings are ultimately what drives stock market prices higher. Corporate earnings have been coming in really good with Apple and Facebook and Microsoft, all the big names, Tesla. They're doing really, really well in terms of their earnings. And these kind of companies, Amazon disappointed a bit. But the main thing is the consumer is healthy, which means you're spending money, which means these companies are making a lot of money. Now, August and September are traditionally weaker times of the stock market, weaker times of the year. So let's see if we get a bit of a pullback. But based upon these corporate earnings, there's a high likelihood that the second half of the year, because of these high earnings, will look pretty good. But we'll see. Ultimately, like I said, earnings, the amount of money a company makes, that will determine how high or low the stock price goes in the future. Back to you, Rav, and we'll see you guys next week.
Thanks, Omar. Always great to learn from you. And Anil, Uncle G, it's always great to learn from you as well. Every time I am with you, I feel so blessed. The last year and a half, I think we snuck in 1 or 2 opportunities. We sat in the backyard, but now here we are, August 2021, and restaurants are fully open. And so let's go grab some Indian food whenever you're available.
Yes, most certainly.
Yes. Listen, Anil, whenever I tell anybody about you, they don't believe me. And so they have to go back to, see our archive TV shows, because whenever it comes to investing, any type of investment, but really investing in the US, you are my go-to guy. I mean, last time we spoke and you were on the show, it was pre-COVID. And at that time you were 90 properties or something like that, 90 some.
Yeah,
all in the same geographic area in, just outside Orlando. How many properties are we now to date?
Yeah, the last time we met was, I think, around 2 years back in April 2019. And that time I had 80 properties. And now I have 100, exact 100.
100. Yeah, maybe I thought 90 because when you sat in my backyard, a while back, you told me 90. But last time you were on the show, it was 80. Yeah. 2 years later, you acquired another 20.
Yeah. That's true. So I did a century.
And you started this. So again, I want people to hear this. 100 properties. These are all single family. I think you have one commercial unit or one multiplex, correct?
Yeah, two multiplex. One is 6 unit, the other is 9 unit. They are
Okay,
townhouses. Yeah.
so 25 of the properties. You said 16 and 9 or 6 and 9?
Yeah, 6 and 9, 15.
Oh, 6 and 9, 15. And so the other 85 are single family homes.
Absolutely.
3 bedroom, 2 washroom, detached.
Yeah, yeah. Even these multiplexes are townhouses, which are 2 bedroom, 2 washrooms.
I love that. And so, Anil, talk to me a little bit about that mindset that you basically have 90 different doors, 90 different clients, tenants, people you take care of, your team does. But somebody may be watching this show and saying, but why doesn't he just buy 2 50-unit apartment buildings? What's the thought process?
Yeah, you see, it's like this. For entrepreneurship, you look for where you can crunch the numbers. So my formula is to buy single family homes, 3 bedroom, 2 washroom, 1,000 to 2,000 square feet, which can give me 1% rent of the purchase price. And if I find that similar situation works, similar number works in a multiplex, I do tend to take that route as well. So while in the process, I found there were 2 good opportunities. So I took 6 unit multiplex as well as 9 unit multiplex.
Okay, so what you're doing, which is very hard to do in Canada, definitely in the metropolis, but what you're doing is you're applying the 1% rule, meaning that if you buy a property for $150K, you want to see 1%, $1,200 per month.
Per month, absolutely correct.
Per month of rent. When you do this, then you feel like you've hit a home run. Now, I know when you first started, this was, your purchase price of a property back then,
absolutely,
maybe $80K, but you were still getting $1,200 a month. So you were doing much better than the 1% rule.
Yeah, absolutely. You see, when I started, it was 70 to 80K, and I used to get around $900 or $1,000 rent. But now also, though market is becoming tight, but still I buy only if it meets my rule, 1% rule.
The 1% rule. No, I love that. And what's always interesting to me is, of the 100 dwellings you have, how many did you see prior to purchasing?
No, I bought all of them on internet, and I did not see any property before buying. Though subsequently I have seen, and last maybe 10 properties I haven't seen, because last time I was in US was in January 2020. So whatever acquisitions I have done after January 2020, I haven't seen even after renovation.
Uncle G, Anil Walia, he has 100 dwellings. He's never seen one prior to purchasing. It was all done online. But Anil, you set this up. You went there before your first property, and you, and by the way, you started this with $400,000. You started doing all this with $400,000.
Absolutely. My initial investment was between 400 to 450K.
400 to 450. And this was, the first properties was purchased in what year?
It was purchased in January 2020, January 2012.
12. Okay, so about 9 years later, you started with 400,000, 450. 9 years later, what is the value of the 100 dwellings, if you will? I know you don't like to share this, but to inspire the people watching, what would you say is roughly the value?
You see, it could be very overwhelming for some people, and today it's touching $23 million.
$23 million. So what you're saying is 9 years, you started with about 450K, and today the value is 23?
$23 million, yeah, US.
23 million USDs. And you are still, And this is all in around the Kissimmee area, which is neighboring Orlando.
That's true. It was originally around Orlando, but now I have expanded to the corridor starting from Clearwater right up to Daytona Beach.
Oh, okay, okay. And you, prior, what I was saying earlier is you set this up. You have 2 or 3 realtors. You have some tradesmen. You have the bank in place. All this you put into place ahead of time.
Absolutely. I did a lot of spade work to, get these things done. Now I have 2 property managers and a lot of people working for me over there.
And so do you still buy these cash and then refinance and get a mortgage?
That's true because we are Canadians, so it's easier for us to buy in cash first and then refinance.
So let's just say you buy a property to make it simple, you're buying a property for $100K cash. Then after you do that, you go to the bank, and what percent do they give you?
They give me 70% back.
So they give you 70% back. So you're getting back the 70K, but really you're getting more because I know you, Anil, you buy for 100, you're putting a little bit of lipstick. Now the new value to the bank is 130, 120, whatever the case is. Some of these deals, you're getting $100,000 back. You're in the deal for almost no money, correct?
Absolutely. So there are a lot of deals where I was in for zero money or 5% or 3% or 10%.
Yeah. No,
there is hardly any property where I'm in for 30% down because every time there is a appreciation. So my money is never 30% down. It's between 20 to 0%.
And in Canada, you've taught me, Rav, the more properties you have in Canada, the tighter they are with you. But in America, it's the opposite. The more properties you have, the better it looks for you.
Absolutely. You see, this is a major difference between Canada and US. US is a very entrepreneurial country. So there, if they see the portfolio is cash flowing, the banks run after you because they have to meet their targets and they want to make money. So I have now set up with 3-4 banks and I never face any problem going forward now.
And so if somebody's watching and they want to do the same thing, it's going to be a little more challenging until they have the reputation with the bank, correct?
Absolutely.
And so I know a lot of people because, like I say, you're the main guy. When anyone asks me, Rav, do you know anybody who invests in the States? I say there's nobody better than my uncle, Anil. Let me tell you his story. But you do some coaching.
Yeah, I'm still coaching people who are interested and motivated to buy properties, real estate in the US.
And right now, obviously, it's they're harder to find, but they're still there. You only do the 1% rule, which I love. Again, for those of you watching, meaning 1% of the purchase price is your monthly rent. If it's not that, and Neil won't do that, and obviously you're not going to do that in Toronto, hence why Neil's investing in the States. But Anil, what is purchase price? What is roughly, give or take, what are we still looking at for the 3-bedroom, 2-washroom, single, detached?
You see that the market in the US is still very good. Last time the market got appreciated by 12%. And this from June 21 to June 22, they are anticipating 14.5% appreciation. So if you look at it, it is still a good place to buy. But if it doesn't meet my criteria of 1%, I don't buy. But if I can flip, I can change my model to flipping, this market is still very good.
So you're doing the 1%, but what is the average purchase price?
So my average purchase price is around between 125 to 150.
120, okay. So we've moved up a little bit, but you're still looking then for the $1,250 to $1,500 a month.
Absolutely. I moved up a little bit, plus I shifted my demography. I went to Tampa. I bought about 7 properties in Tampa, and 1 unit is in Daytona Beach.
So you bought in Tampa. So you took a trip to Tampa?
Yes. No, I didn't take a trip. I have yet to see those properties. I bought them through internet, but I have now 7 properties and a separate property manager for Tampa.
No, I realize you didn't see beforehand, but usually you go and you source out realtors and property manager. This one you didn't. You did this virtually?
Yeah, virtually. Yes. Even the property manager selection was virtually. I have yet to meet the property manager in person.
I love your style. Listen, let's take a quick break and let's break down the numbers on one of your deals. Where is this deal located that we're going to look at?
Yeah, it's located in Tampa.
Tampa. Okay, beautiful.
Yeah, it's called Spring Hills.
Okay. We're talking to my good friend Anil Walia. He is an investor. He is a husband. He is a father. He is a grandfather. He is a great friend of mine. I'm kind of his adopted nephew, if you will. He's teaching us how we can make money investing in the US. Don't go anywhere. We'll break down some numbers on his latest deal. Anil Walia is on the show.
At Theta Training, our goal is to help you achieve financial freedom by teaching you the foundations of trading stock options. Join our growing community. Learn through our live-streamed weekend course, or develop your skills at your own pace online. Understand how the stock market works and how you can use the options market to earn additional income. Achieve financial freedom and live life on your terms. Let us help you build your empire.
Hey, it's Rav. Welcome back to Everyday Investor. We're talking to Anil Walia, learning how we can make money investing in the States. Before we do that, let's find out what's happening in the world of mortgages with mortgage expert Kyle Ford. Over to you, Kyle.
Thanks, Rav. This week I want to talk about taking a mortgage into our retirement. For many years, Canadians have been preached that in order to live a comfortable retirement, the first thing we need to do is pay off the mortgage. This comes from our parents' generation, who went through much higher interest rates, such as 18, even 20%. The question becomes, in today's ultra-low interest rate environment, should we be taking a mortgage into our retirement? This is always going to have a lot to do with your personal risk tolerance, other income, living factors. But the question I like to ask is, if we have the ability to borrow at 2% and lend at 10, 11, 12%, does it make sense to take a mortgage into retirement and use the spread to create additional income? This is something that I'm seeing more and more Canadians turning to, and I'd be happy to have a review with you and your family to discuss if this is an option that might work well. As always, don't hesitate to reach out to myself or the rest of the Kyle Ford mortgage team. Thanks, and have a great day, Rav.
Thanks, Kyle. Always great to learn from you. Anil, always great to learn from you. Thank you for teaching this. Let's break down one of the deals. Is this the 100th deal?
Yeah, this is the 100th house.
This is the 100th house that closed when?
It closed on April 16th, 2021.
April 16th. Okay, so just a few months ago. Okay, so walk me through this. This deal is located in Tampa.
Spring Hills. Tampa, Spring Hills, yeah.
Okay, and it's a detached?
It's a detached 3-bedroom, 2-washroom.
3-bed.
1,050 square feet.
Okay, 1,050 square feet. So, you've recently gone to Tampa. Before you spent a lot of time in the Orlando area. Now you've gone across to the Gulf side of Florida and you're in Tampa, but yet you never went there. So you sourced out realtors. Like, how do you find these properties is what I'm getting at.
Yeah, you see, there is multiple channels which I have opened up. I remain in contact with the wholesalers. There are a lot of auction sites, and there are other ways of getting the deals. Plus, realtors, sometimes they send it, but mostly the realtors, if it's a good deal, they grab themselves. So you have to rely on the other sources to get a deal.
And how much time do you spend? Because I know you've also talked to me about your stock options. You've been trading stocks, and also I think a little bit of nurturing for Omar Khan. A little bit, I think, correct?
Yeah. That's true. You see what happened in last February. I refinanced 20 of my properties, and I was left with about over $1 million in the bank. But I decided to take vacation and went to India. When I came back on 2nd March 2020, I found there's a cash lying in the bank and stock market is melting. And I didn't know ABC of stock market at that time. I didn't even know the stock symbols of Apple or Amazon. I started learning at that time because you see, a good entrepreneurship is to grab the opportunity. So I did undergo some training and some knowledge here and there. And I started investing in May 2020 in the stock market. I met you and you introduced me to Omar Khan and Theta Trading I joined. So I took a few steps with their help as well. And that stock option thing is doing very well. And I'm just waiting for the great opportunity in US on the real estate when I liquidate all this and go back to real estate once again.
When you liquidate what? All the stocks?
All the stocks.
And go back into real estate when you find another kind of deal. But you're still finding deals. Now we're in Tampa.
Yeah, absolutely. You see, another thing I found, as I told you that my portfolio is around $23 million. So there is a hell of a lot of capital gains in that. So I was trying to find a solution to offset the capital gains. I came across an insurance product, which is a great product where you can, you have an opportunity to offset your capital gains. This is how it works. Like I took a insurance policy of $8 million. You pay a premium of $500,000 every year for 10 years. But the beauty of this is you pay $500,000 on 1st of January. On 15th of January, you get $500,000 loan back from a bank. So again, next year you pay on 15th of January, you get a loan back from the bank. So practically there is no money from your pocket. So, but how it works is the money you pay the insurance premium, it grows at 3.5 to 4% every year. And the loan you get is at 2.5% at prime. So you make a spread of 1% in the insurance product. Plus down the line, when you go off, your inheritors will get $8 million. So this product is without any expenditure from you. I mean, there are conditions to this, and you got to be, brave to hold the so much of loan. But it works. You get an opportunity to offset your capital gains without any money from your pocket.
And people can learn about this through your coaching?
Yeah, I can introduce them to this. I've been cleared medically by the insurance company. So maybe in 30 days time, I will close that deal as well.
Okay, great. Well, your contact info's there. I'm sure people, I know people call, whenever you're on the show, people call you. They want to learn about this. They want to learn about now stock options. They want to learn about how we can reduce our capital gains. And of course, I know you, everything is legal.
Absolutely legal. Absolutely.
Finding ways to do this. So we bought this in Tampa for how much?
I bought this for $122,000.
So we bought this for $122K. And this was in April?
April, yeah.
April 21, just a few months ago. And so if I know you, I need at least $1,220 a month of rent. How much rent are we getting?
No, I spent $6,000 in repairs. So total investment was $128, yeah.
$6,000 in repairs? Man, you make that money go a long way. Yeah. I don't know what you can do with $6,000.
$128. And then the appraised value came at $140.
So after you spent $6,000, you were able to lift the whole thing $12,000.
Absolutely.
So now the new value is how much?
140.
140K.
Yeah.
Okay, and you refinanced, you pulled your money out. How much are you in for this deal?
So I got the refinanced at $98,000. I got it back.
98. So you got back 98K, and so you are left into this deal for 42?
No, my expenditure was only 128.
Oh, that's right. So 128, so 30K.
30K.
So you're in the deal for 30K. Okay.
Yeah.
And how are we making money on this? So what is your rent on this?
Rent is $1,425.
$1,425. So every year you're making $1,000 or so in cash flow.
Absolutely. $1,120 cash flow without mortgage. Yeah.
$11,200?
$11,020 per month.
$1,100. Yes, yeah.
Yeah, $1,120 per month. Yeah.
But I'm saying if we look at this, and for those of you watching, make sure you take a picture. So basically, what I'm saying is, now when we're all said and done, you're into this deal for 30K. Let's call out of pocket. Now, I know you use other ways to do this, but let's just say out of your own pocket. So teach me, how do I make the profit on this now? What am I looking at?
Yeah, you see
in 1 year.
Yeah, 1 year. So,
Okay,
so 1 year profit, my net income from this is 1120 per month. So it becomes $6,400, $6,480 per year.
6,080?
6,400, 480. 6480.
Per year in cash flow.
Yeah, so this is cash on cash. Yeah.
Okay.
So if I take mortgage pay down also,
Yep.
then that is 2484 mortgage pay down.
A year.
Yeah, a year.
2484. Okay.
Yeah. And then if we take a normal appreciation of 3%,
appreciate at 3% on the 140.
140. So it's $4,200.
Okay.
Yeah.
And then you add that up.
Yeah. If we add that up, it becomes 13164.
13164.
Yeah.
Okay.
So
So we're making, I take my profit, my 13,164. I want to divide it by what I'm in for. And that spits me out an ROI of
44%.
44%. And I know you're being conservative with this 3%, you know, but you're which is good to be conservative. So we're making 44% on our money, and now I have, you know, an asset in Tampa that can go up in value.
Yeah, you see the first year I have also made 12%, $12,000 extra. So first year return is 84%.
The first year?
First year return is 84% because I have made additional $12,000 in the appreciation.
Yes, yes, yeah. We didn't even talk about. You're correct. We didn't even talk about the forced appreciation.
Yeah, forced.
So in the first one, you almost doubled your money.
Absolutely.
Right, and then going forward, over 40% a year, annualized, and as it gets paid down more and it goes up more, that percentage it gets bigger as well.
Absolutely.
No, Anil, this is great. And so your plan is you have some money from the refinance that in the stock options. You put money into this insurance to bring down the capital gains, but you still are going full throttle with buying in the U.S. You're looking for deals, but you are predicting that it might soften in the near future?
No, in the US, they do not predict as much because the Zillow is anticipating an appreciation of 14.5% in that area.
No. The only reason why I said that is when you're going to take your stock options money, and one day in the future, you'll invest it again in the States when the time is right.
Yeah, absolutely. Because you see, this government is printing a lot of money. So there is always a fear that the dollar can depreciate or inflation can take place. Plus, there are 9 million people who have sought mortgage forbearance. So once the mortgage forbearance issue is over, some properties will come in the market. Plus, they had given instructions to the landlords not to evict tenants. So that instructions are also getting over. So once the people start evicting the tenants, then also some properties will come. Plus, the commercial real estate, a lot of businesses are going down. So there is likely to be a shake-up in the commercial industry. And the underlying principle of mine is to enjoy life, to spend time with the family, to go on vacation, and have a total balanced life so that we can, enjoy. It's not the destination which is important. It's the route is equally important.
Love it. Anil, thank you so much for being on the show.
Thank you so much, Rab.
Yes. And thank you guys for watching. Without you, we would not have a show. Make sure you tune in next week. Same place, same time. Honey, I love you. I'll be home soon. Bye, everyone.